JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 11th of May 2021. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest, and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis, so yeah, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So, now then, jumping into the charts. So I'll go through a few quick ones here just to see what's happening. So basically, the markets yesterday, the U.S. equities turned south, and yep, that's the result we got here on the other ones like Nikkei and Shanghai Composite, and then I'll get to DAX as well. But basically, the weakness kind of kicked in. And for now, you can see that the idea here that if it drops below the 29,241 territory, kind of could open the door towards lower levels. This idea is working out. However, still this move lower could be classed as a temporary correction because we are still trading above this upside line taken from the low the 19th of March of 2020. So that's why, guys, if you want to get a little bit more excited with further declines, well, probably wait for a drop below this hurdle right here, below the 28,326 territory right here, because as you can see, it recently kind of did act as a very nice area of support. And let's see if the same story happens this time as well. But nevertheless, the index did close heavily in the red, I would say. So minus 3%. Well, I mean, like I said, let's be very careful and cautious here. Let's see how it's going to behave near this upside line, near this support zone. If all that gets broken, yes, of course, lower levels could be met, guys. But if this, of course, provides good support, then yes, a rebound back up could be possible. However, this time I would actually prefer to maybe wait for a push. Let me just draw the arrow here. So what I would like to see here is a push back above the 29,241 territory. At the same time, the price could climb back above the 21-day EMA, and potentially more. Maybe buyers could see this as a good opportunity to step in. So that's why, guys. At the moment, yes, we had a bit of a decline here, but still there is a chance for the bulls to step in. But let's see if they use that opportunity and come in somewhere near this upside line together with this support hurdle. Now, jumping into Shanghai Composite very quickly. So, unlike Nikkei, Shanghai Composite is still showing strength, but nevertheless, it did drop initially. But as you can see, now the bulls are jumping back in and trying to send the index back north. However, if you remember yesterday and well last week as well, I started talking about this rising channel pattern, which could also be seen maybe as part of a temporary corrective move here because the prevailing trend before kind of getting into the rising channel pattern, prevailing trend was to the downside. So basically this move higher here, this rising channel could be seen as a temporary correction. But however, we cannot really, let's say, get comfortable with the downside until we see, first of all, a daily candle staying outside or below the lower side of the rising channel, and also just from my side, I would prefer actually to wait for a drop below the 3,373 territory right here. Also, a nice daily candle close could do more here for the sellers. And at the same time, we could see the daily candle staying below the 200-day EMA, and yep, basically that could lead towards lower areas. Now, at the moment, I will say that it's a bit of a tricky one. Although yes, we remain within the rising channel pattern, but I would like to see this one climbing back above the 3,496 territory, as I mentioned yesterday, before targeting the upside. So that's why yes, there is still hope here for the bulls. However, a certain criteria needs to be met, in my opinion, because I would prefer to wait for a push back above the 3,496 territory before, let's say, considering an up move again. But for the downside, I need to see a drop and a daily close below the 3,373 territory before targeting lower areas. Now, jumping into the German index, DAX, and here basically the index also declined. I mean, initially it did close or actually it kind of remained fractionally it wouldn't say fractionally in the green, but yep, I mean basically unchanged, I would even say. So yes, so the index closed virtually unchanged, and but of course the after hours we saw the decline, and the index did drift heavily to the downside, and we can see that currently the German index is trading at around 15,229.28 zone. So basically well below yesterday's close, and that's of course that was triggered by the sell-off in the US tech. So long story short, still, even though we saw that decline, for me, preferably, in order to consider, or let's say to get comfortable with the downside, I would need to see a drop below this downside line taken from the high of the 19th of April, and also a drop below the 15,093 territory right here, marked by the low of the 6th of May, because at the same time we would have the price already below the 21-day EMA, and potentially more sellers could join in. So that's why this move lower here, yes, we could see maybe a bit of a more slide. Oh, there we go. I cannot even formulate it correctly. So another kind of potential small slide here again. We could see that. But for now, let's say if it continues to trade above this downside line, we could class this move lower as a temporary correction before another possible leg of buying. So keep that in mind, guys. We've seen something like that happening before, where, for example, the instrument comes back down and kind of slides along the downside line, which it kind of broke earlier on, and then reverses and pushes higher again. So that's why I have my downside scenario only from around here somewhere, only if the price gets back below this downside line. The Dow Jones Industrial Average. Now, of course, U.S. equities yesterday drifted to the downside, and yesterday the index did form a new all-time high, and let me just probably adjust, actually let me start fresh here, because again there's way too many lines here on my chart. So yeah, let me do this from the beginning. So first of all, we're still trading above this upside line, so that kind of still gives hope here. Even if we decline here, if we go for a larger correction, guys, I mean there's still a chance for the bulls maybe to step in somewhere around here. However, from the kind of slightly shorter term perspective, I would say that yesterday we still closed above this upside line here, this short-term tentative upside support line taken from the low of the 4th of May. However, if we take a look at the cash index right now, we'll see that the price is trading at around 34,680 zone. So basically somewhere around here, just bang on this line. So this is where it's going to be very interesting to see if actually this candle that we formed yesterday won't be seen as a potential shooting star here. So again, I mean, reversal signal, but again, let's approach this very carefully, guys. And if you want to go for the downside, let's say, then probably stick to maybe the low of the 7th of May here, and that's the Friday's low, and that's roughly around the 34,464 territory. A nice good drop below it may, open the door towards. Now this is where I'm going to aim for the 21-day EMA. I'm not going to draw any more lines for now. But what I'm going to do here is, if we do see a drop below the 34,464 territory right here, marked by the low of Friday, then yes, my next target is the 21-day EMA, and then I'll take it from there. I just want to see what's going to happen after. Nasdaq 100 here broke the upside line, and well, I mean, this all this is not really looking good here for the bulls, I would say. But let's not rush into anything yet, because yes, we broke this this upside line, and this increases the chances for a slightly further move lower. And this is what I said previously when I was covering Nasdaq, that in order to, let's say, consider a bit of a decline further, maybe a drop below this 13,420-21 zone is needed. And as you can see, this is what we got exactly. We got that drop. So now my next target is the 13,180 zone right here, not far from this 100-day EMA shown as the green line, and then we'll take it from there. Because again, let's be careful, because if the 100-day EMA does provide good support once again, as it did, for example, here on the 25th of March, then yes, a nice rebound here back up could be possible. And let's not forget as well that we are still trading above some other upside lines here. Now, again, some of them might be maybe tentative a little bit, but nevertheless, we could keep an eye on those, because that could still work out. So, I mean, one of these is this one right here. I mean, or actually maybe even better, this one right here. So taken from the low of the 24th of July to 2020, and then of course, yeah, I mean, if this gets broken, then maybe even further declines could be possible. But at the moment, let's guys keep it short and simple. Yes, there is a bit of weakness. Let's go step by step. Let's not go drastically, let's say, to the downside, but yeah, for now, what I'm going to target here is this 13,180 zone, and then we'll take it from there, because currently we can see that the cash index is trading at around 13,263 zone. So basically somewhere around here. So we're not far from this area. So let's see if we can reach that, and if we can test that, and then we'll take it from there. DXY. So DXY. Excuse me. DXY did kind of hold on here, and yep, it did show it, or it is showing here with yesterday's candle. With this yesterday's candle, it is showing a possible kind of reversal signal here. However, looking at this picture, my preferred scenario for the upside is a move back above this 91.42 zone right here, because as you can see, it acted as a very nice area of resistance recently. However, if it climbs back above this 90.42 territory, now this, of course, yes, could increase the indices' chances of moving maybe higher. However, we do have this little tentative downside line here, which is drawn from the high of the 31st of March. So that's why. So that's why there could be still a barrier here for the upside, and that's why I have my upside scenario here from around this 91.42 level. So keep that in mind. But if the index continues to trade below this upside line taken from the low of the 6th of January, then, well, I mean, don't get me wrong, we're probably not done with the downside, and we could maybe go ahead and test the low of the 25th of February, and let me just double check that that's also the lowest point of February, near the 89.68 zone. Now gold. Gold did push higher a little bit yesterday. However, I'm still sticking to this idea, and that we could potentially see a further move north. However, we'll be very careful near this downside line. So basically, guys, this is just a very quick update. For now, I would say yes. I mean, there is a chance for a further move north here, but be very careful near this downside line, because if it holds, another slide here could be possible. Now, WTI oil, there we go. Had a mind block here. WTI oil, and yeah, I mean, it's currently, I would say, in the red, but carefully in the red, because it's still trading above this upside line taken from the low the 7th of April. Now, in order to go for the downside, we need to see a break of this upside line, a drop below the 21-day EMA, and yeah, I mean, that's where we would then consider maybe a bit of a larger correction to the downside. And the reason why I'm saying correction, because we're still trading above some of these upside lines, like for example this one taken from the low the 24th of March. Now, for now, like I said, guys, we'll be very careful, and if we do see a drop below this upside line, below the 21-day EMA, then we'll aim for the next target here near the 64.60 level, 64.60, which did provide very good support recently here back on the 26th of April, at, well, basically at the end of April, and also it kind of, this area coincides with this upside line taken from the low, the 24th of March, and then we'll take it from there. But that's, of course, all in terms of the downside. If the upside line gets broken, for the upside, probably to be a little bit more on the safe side, I would prefer to wait for a push back above the 69.92 territory right here, and then yes, higher levels could be met. Now, jumping into a few cryptos very quickly on Bitcoin, and yeah, drifted lower, however, still remains above this upside line, taken from the low, the 11th of December. So, for now, I would say let's be very careful here. Let's be very cautious. In order to go for the downside, well, again, a break of this upside line and a drop below the 52,377 territory would be needed. For the upside, I need to see a push above the 58,945 level right here in order to get a little bit more excited with the upside. So, because as you can see, recently this level was violated, but we didn't really get that daily candle staying above it, so keep that in mind. Bitcoin Cash, so yesterday I mentioned this one, and basically it seems like maybe it's forming somewhat of a maybe a pennant here, or maybe it's maybe even a bullish flag, because we do have a nice pole here, and now this little correction here could be seen as something like that, as I said, as a bullish flag or a bullish pennant. But again, yesterday also what I mentioned, that if in order to consider maybe the downside, a drop below the 1,218 territory would be required. You can see that yesterday we drifted lower, we tested that hurdle, but we didn't really stay below it, and yeah, we rebounded. Now, like I said, I'll stick to this idea here for now, with maybe of seeing somewhat of a bullish pennant or flag here. I mean, it's not very clear, I would say. Nevertheless, if you want to go for the upside, maybe a push above the 1,507 territory here, or if you want to be very, very cautious, a push above the 1,604 zone, which is the current highest point of May. And if that gets clear, then yes, higher levels could be met. Let me just quickly double check something here. Yes, we're still nowhere near the all-time high, which was roughly around the 4,385 zone. So keep that in mind. Ethereum here is did also see a bit of weakness yesterday. However, look at this. I mean, yesterday I've mentioned that for me, what I need here to see is a drop below the 3,520, or should I say 3,530 zone, in order to consider maybe a bit of a larger correction to the downside. But as you can see, we did drift lower. We tested this area and then we rebounded back up. Now, don't get me wrong. I mean, we're still looking quite positive. However, I will go step by step on this one, and I would prefer to wait for a push above the 4,213 territory, which is the current all-time high, guys, here, and then yes, higher levels could be met. Now, jumping into Ripple. So Ripple is drifting to the downside, or should I say drifted yesterday lower and broke this little short-term upside line, the one that I was talking about. If you remember yesterday, I've mentioned this, and basically, yeah, the crypto broke this upside line, drifted lower, fell below this 1.4265 territory, the one that I also discussed, and drifted further south, where my next target was this little other short-term upside line taken from below the 4th of April. Now, just fell shy by a few points from reaching it, but to be honest, I'll take that. It's a very interesting and good result, I would say. But yeah, now let's review all this. And first of all, let's get rid of this upside line. No longer needed. Now, what I'm going to stick to here is basically I'm going to take a very, very careful approach. And probably I'm going to... Now this is the point where I'm going to stay neutral on this one. And I'm going to watch and wait for a violation of one of these lines here before considering the next short-term directional move, guys. So yep, again, we are at a very interesting spot, so let's be very careful here and let's see how this is going to play out. Jumping into a few pairs very quickly, guys. AUD, NZD, also something that I wanted to quickly update you on. And yeah, this is the yesterday basically I said that this could be seen as a potential kind of bullish pattern here, of course. I mean, and yesterday we were popping higher and said that at that moment, yes, everything's looking quite positive. We were trading above the 1.0793 zone here. But once again, we didn't get that daily candle staying above this area. So basically, again, we're kind of now cautiously bullish. We did get another false breakout, and just you can see how important this level is. And basically, it's even we can even probably highlight it. I mean, it's that important. So so we'll keep an eye on this one. We'll continue monitoring it, and yeah, we'll see if the pair can eventually overcome it and stay above it. Sorry, not overcome it. It did overcome previously, but can it stay above it? Now this is another thing here. So yep, for now, guys, keep your eyes on this one. I cannot really consider the downside here unless we and by the way, let me just get rid of this pattern. Unless we drop below, and let me just grab an arrow below this little hurdle right here, below the 1.0711 here, which did provide very good support recently. At the same time, if we drop below this, at the same time we would already be placed below the 200-day EMA. Now, NZD JPY very quickly here is looking a little bit more interesting from the bullish perspective, but as you can see, we're still struggling with this 79.22 zone, approximately around here. Yesterday we did get a pop above it, however, we didn't really get the daily candle staying above it. So yeah, we're still watching this one, and we need that pop, we need that daily candle to remain above this area in order to go for some higher levels. For now, let's be very, very careful. For the downside, guys, well, this is where probably some adjustments are needed. So for the downside, in the short run, maybe a drop somewhere below this hurdle, the 78.05 level, would be required. But even then, we do have this upside line, another upside line, which could provide support here. So we'll be very careful. If it declines, I'll pick up on this one again. But at the moment, it's leaning a little bit more towards the upside. USD CAD. Now, USD CAD, this one, yeah, it's a bit of a nightmare, I would say, for the bulls. I mean, look at this. Since March, the end of March of last year, this kind of continues to drift lower, and it's not really finding any support here. So yeah, at the moment, guys, it's I would say, why it's not dragging here? There we go. At the moment, it's very, very tricky here. I mean, WTI oil, in general, oil did strengthen and kind of helped the Canadian dollar to strengthen as well. But if WTI oil suddenly starts drifting heavily to the downside here, guys, maybe this is where we will see USD CAD again pushing north. So keep that in mind. But at the moment, we're just drifting lower, and we're approaching a very important level. This is something for you to keep in mind, and that's the lowest point of September of 2017, guys, and that's roughly around the 1.2062 zone. And then, guys, we'll take it from there. So be very careful with USD CAD. GBP USD looking quite promising here, and yep. I'll be quick on this one, to be honest, because yes, we managed to stay above this 1.4083 territory. So in a way, right now, even if it drifts lower, but let's say stays somewhere around here above this hurdle, then yes, higher levels could be met again, and the pair could continue drifting north. If it drops below this, then maybe, and if it then falls, let's say, back below the 1.40 zone, somewhere around here, maybe a bit of a further corrective move here towards this upside line could be possible. But still, there could be a chance for the bulls to step in. So keep that in mind. By the way, also keep your eyes on the BOE's Governor Bailey talk today, so that might maybe help move the pound a little bit, I would say. So so yeah, there's, in terms of the economic data here today, we do have the monthly OPEC monthly report, but let's see when that's gonna come out. So yeah, for now, guys, that's the kind of let me just double check. Something's wrong here with my timing. I think we have a wrong time here. So right, okay, so yeah, there we go. So that's a little bit better. In terms of economic data, we have the OPEC monthly report, the EIA short-term energy outlook as well. So, and also the JOLT US JOLTS job openings. So that's going to be interesting to keep an eye on. But for now, looking at this picture, guys, from the technical side, we'll be very careful here, and we'll keep an eye on this 1.4083 zone for now. And finally, EURUSD. So drifted higher, but failed to stay above the 1.2150 territory, and we can see we drifted back down. However, don't get me wrong, the bulls probably are not giving up yet, and we could still see a move higher if we push back above the 1.2150, which, as you can see today, already it was tested and acted as a good area of resistance. But if the pair does eventually get pushed back above this hurdle, then yes, I'll continue aiming higher, and my next target will be the 1.2190 zone or the 1.2243 level, and then we'll take it from there, guys. For the downside, I need still, for now, at this point in time, I might change it later on, but at this point in time, I need to see a drop below the 1.1990 zone right here in order to consider maybe a bit of a move lower here towards the 200-day EMA, and then, like I said, we'll take it from there. So, guys, that's it for this session. Just a quick reminder that there won't be any traders tea time today. We'll resume with the Traders Espresso tomorrow. But guys, I hope you'll have a fantastic trading day. Stay safe, guys, and I'll see you later. Thank you very much, and bye-bye.